A couple of days ago, I posted a video. It's called Stock Hacking Strategy versus Horse Hacking Strategy. Today, I would like to add some more information because I use the TD as an example. So I would like to get a little bit details number to prove, not really prove, but just want to explain how this strategy works. Okay, so if I go to td.com, which is TD Bank's website, they have a investor relations page where you can find information you need as an investor. So in this example, the total investment is $425,000 from 2012. So today, I just calculated the total return. So you will have just above $1 million. Because you will borrow another $2,000 per month for your living expense, including your rental cost. So after 6 years, it will cost you $144,000, and plus the margin interest cost, which is around 4% for the money you borrowed for investment. So this will be another maybe $80,000. So in total, it will cost you 220 something. So after 6 years, you should have, in this $1 million, so you should own like I believe it's around half, just above $500,000, so half. So you still own half, but it's a $500,000 is your own money. So basically, your profit is about $350,000 after 6 years. This is the real number, okay? So if you do it from 2000, let's see, another 2006, then I think the number will be $900,000. So you will have a profit around between $800,000 to $900,000. And if you do it for 15 years, you have around a $2 million profit. Roughly, you have $2 million profit. So let's say 20 years, I think you should close to $3 million profit. So basically, the longer you invest, the more profit you will have. And during these 20 years, we had 2 big recessions, but still you can make $3 million. So I want to explain a little bit why this happened. So this is Morningstar.ca. If you go there, you enter TD, then you will get this information page. First, I would like to have a quick look at the case study. So basically, from 2012, they earned $3.38 increased to $5.50. This was last year. This year is up 20%. So this year will be around $6.50. So the business is growing. Basically, the TD and the business is growing. They increase the value of the business. They make more money, and also they pay out more dividend. You can see here dividend, they almost double the dividend. Also, yeah, another thing I would like to mention is the valuation. The reason why people talk about the real investment, because one is the leverage. The second important thing is the positive cash flow. Why Max friend purchased one property and he could live there for free? Because the positive cash flow from the property or rental income. When you invest in a stock, where is the positive cash flow? This you need to have a business mind to understand. If you look at here, this is the dividend yield, and this one, the earning yield. So when you own a rental property, let's say every month you have an income, let's see, $3,000, and you have a cost at $2,000, then you will have $1,000 positive cash flow. Here, this is the income for your investment portfolio, the portfolio investment portfolio income. So it's right now is 7.4%. This is the annual, so 7.4% annual. Then what happened is when you borrow money, for example, you borrow money from BMO Bank, right now it's 4.1% today. You can go their website to find out this information. It's a margin account. Okay, I'm talking about the stock market investing. So it's a trading investing margin account. It's 4.1%. So if your capital cost is 4.1% a year, and your earning yield is 7.4, this means you have 3.3% positive cash flow. Most people will they don't pay attention to this. This is basically how the business mind people and the investor, how they think about stock market investment, because they are looking at this number. Also very important is for TD, it's a business. Business is not like a, for example, if you own a rental property, this year you charge like $400 per room. Next year, you may increase the rental price. Of course, you may also drop the rental price. Depends on the market. Let's say you increase your rental by 5%, then you will generate more rental income. But in stock, because the business is doing good, they are able to make more profit. For example, TD, from 2012 to today, they almost doubled their income. So, if in 6 years they are able to double their income, then this earning yield based on your original investment capital will be 15%. But you borrow money, the cost is still around 4-5%. So you, after 6 years, you will have between 10 to 11% positive cash flow on your investment. And I want to bring up this. I want to explain why you invest and you can generate more profit, get a good return, is because of this. because the earning yield and because the earning yields grows. So in today's markets, I'm thinking, I think it's for especially for the young generation. If you live in downtown Toronto, it may be very difficult for you to find a rental property. You can hack. Let's say you can purchase a property and live there for free. But if you follow the stock hacking strategy, you still have a chance. But before you do that, you have to learn the basic concepts and principle about stock investing. And once you understand it, and you maybe can copy this example. You don't have to invest in TD. You can invest in any other companies. If you, after you study, you analyze, and you believe you will have the same results, and you can also set up an investment portfolio which can reduce the business risk. So I want to give this example to encourage the young people. So you may not, because Matt and his friends in London, Ontario, the housing price there is still cheaper compared to the price in GTA. So if you live in GTA, you may not be have the same opportunity to invest in rental property. But you can think about the stock market. Actually, for the stock market is for everyone. It doesn't matter where you live, right? Even you don't live in GTA, you still can do it. So this is something I personally like stock investing better than rental property, because it's the rental property investment is just not for me. I'm not saying this is bad. I think it's just not for me. I know I'm not able to manage the headaches. So I give this example and with more detailed numbers. So I hope after you watch my videos, you may have more interest in starting the value investing. Thank you.